Welcome to commodities, and first up, just want to have a look at the US dollar here on the 2-hour chart here because it's got a bit of sentiment push and pull with the commodities. Essentially, we're looking at 5 waves up through here, nice strong third wave in the middle here. So we're looking for some, as I probably mentioned yesterday, but we're looking for some sort of correction across this level here in the normal sort of 3 waves across here, and then a push up here again. So this push up here again will place pressure on commodities. So just sort of keeping that in mind and seeing how it works. But currently the move up through here is meeting its old highs over here, so it would be overbought, so it needs to rebalance. Right, moving on to gold. Just on the daily chart here, we've been looking at this particular little pattern through here from A to B as a corrective pattern, as a triangle pattern, and once it's complete, then a move down through here. But this can actually come further down through here as well. But I put it just here because I know there's a lot of support at the midpoint here. So let's just sort of drill in here and see where we're up to. So as the little B wave from the A wave just over here all the way through to the B wave here, a triangle's in 5 waves. So the A, the B, the C, the D, and the E. So it's basically, triangle diminishes and normally diminishes into a particular number. And we're looking at the 1300 here. Now, this little move that we've got up through here, look, it may not be finished. I think there might be another little push up here into 1313 or 1315, somewhere in that little mark there, but it could fail from here too because of this trend line coming through here as well. So it'll be interesting to see what's installed there. But just drilling into that a little bit, the move up to the 1313 and maybe a tad higher is based off this move here of wave E here in terms of the A, the B, and the C wave up through to here. So a C wave would basically be wave 1, wave 2, this is all of wave 3 here, wave 4 unfolding here, and then wave 5 up through to here. It is possible for it to fail here at this trend line, and that would actually place wave B here as such. So we've got an A and a B and a C wave for wave B here, and then we've got our 5 little waves in through to here. So I'm not really sure about that. In terms of shorting, if this is going to be the case, we'd want the 1300 here to be the retested resistance, and we want to see the volume on that side of the market. It's good to have the trading levels and Elliott on the same page, telling the same story, basically lining up, having them on opposite sides. I don't know, it just sort of puts a bit more sort of risk there that's maybe not, a bit unnecessary. So just in tracking those 5 waves up here, as I mentioned, the wave 1, 2, and then the wave 3, the wave 4 here. It does appear to be a wave 4 because we've got that 3 wave correction there, but we'll need to take that high out there to prove that, because that little move there so far is bearish corrective, so it can actually sort of drop. But let's see, we're not really fussed because we just need to see what comes out of the range of 13 and 1310 here. So anyway, getting close there. Just look at the silver market as well. We've been tracking 5 waves up through here, and over the last few days we looked at wave 3, back for wave 4, and looking for wave 5 up here. So this could also have another little push here, because if we look at this here, it's sort of like the 1 and 2 in here, and then we've got even wave 2 across here, then we've got this strong move up through here. So this can be a little 4th wave here and a 5th wave up through here, but we wouldn't, we talked about going long through these points here, and that's fine, but you'd need to cover, obviously into the $2,000 at $20, and it's going to take a while for it to find support up here if we're going to be changing our minds on the long side here. And I do have a count on the bigger picture for a higher move for silver. That's why I'm a little bit concerned about the gold being above the 1300. But let's just see them play out, unfold into a particular point that creates a reasonable setup, either long or short. The copper market is pretty much doing what we expect it to do, looking at a classic trading levels pattern at 315, the midpoint here, and the classic pattern is the arrival, the reaction, finding the first support, the first high above the level, and then the A, the B, and the C correction here, which we'll call wave 4, and then the move to 320 there. So, we can consider the BHPs of the world to edge higher over the week ahead. Oil still moving up, and we had a target of 102.50, and that target's in there now. But once again, this little move up through here is very much like gold and can have one more little push up through to here. So it can move up to 103 or just 103.30 sort of area. Also, this is where the supply starts as well. It's where the resistance is going to be. And yeah, look, we just got to allow it to play out. We've got to let it pull back to its 61.8 retracement level. If that's correct, like gold, it will move down from that point there. So it's just really a matter of, just allowing it to play out through here. And this is the count I've got here so far, 1 and 2 here, and then 5 waves up for the third wave here in blue. So we've got wave 1 here, wave 2, then 1, 2, 3, 4, 5 for the third. Nice counting, fourth and fifth. And so we've got the fourth wave. We'll pull back to the fourth wave of 1 lesser degree. So expecting a corrective pattern across here, and then a move up in wave 5 here. Because the extension was in wave 3 here, that means that wave 5 here would be about the same length as wave 1 here, generally speaking. So we've got, a full point there. So a full point from here to here. So depending on what else is driving it at that point there as well. This with gold, we're expecting another high. It possibly could have a top in, but I think we will have this little move here, and it is lining up with gold. I think that's sort of interesting. On the daily chart, this market is moving into the overbought area. It can still have another session or two up there, depending on where the close happens here for the daily. That will keep it in check for the time being. But anyway, that's that. The gas market still on track and moving lower here, expecting a bounce off the 430 as wave 4 back to a 440 or even higher to the wave 4, 1 lesser degree, and then wave 5 down here into 420. So not a lot sort of happening in this little space here with trading. What you see here is not what you get next. You always get the opposite. Soybeans, like I said, nothing really happening here yet. So we just got to allow this to play out. We're just basically looking for a larger correction at the 1500. Then we're looking for support. If we get support next before we get a larger correction, well, then we'll look to go long again on that basis. But as it stands, soybeans are slightly sort of different pattern than wheat and corn, but wheat and corn, I'm bringing their wave counts in. So I'm not going to spend any time on soybeans at the moment because there's nothing there. It's still still overbought at this particular number up here. So we just need a bigger correction as a foundation for the next trend. The wheat and the corn market, I'm bringing their wave counts into sync now, and so I'm using the alternative count here for wheat. And we're looking at all of this here that we've been working with up to wave 1 here. And then we're looking for the A, the B, and the C here for wave 2 coming back into the medium level there. It is reasonably possible that this 3-wave move here is part of a larger B wave up here, and we can have 5 waves down for the C wave, and then we can move straight up from there. If that's the case, we won't miss it anyway, because we'll be looking to build a trade back in on this side of 700 and group 1 here. But as it stands now, I have to stand back and have a look at this and what's happening with the US dollar and so forth. And this is the most plausible count at this stage here. So having wave 1 up here and wave 2 back here. And that brings in a slight adjustment for the corn market. And what I mean by slight adjustment, it means that I had wave 1 here. I'm going to bring wave 1 here now and keep the same A, B, and C here for wave 4, and then wave 5 here making wave 1, which would make this the A wave, the B wave, and the C wave coming back into this area here. Not that it made any difference because we were expecting it to come back into the 480 support and check all of that anyway. So look, it just appears that we're going to get a larger correction, and look, I'm happy with that. I mean, it's a bit time consuming and so forth, but I like to see a nice, proper, well constructed correction at a level and then find support. It just makes the next trend much safer to trade, and you can just work outside the money management a little bit and put a bit extra in. Okay, the coffee market, nothing's changed. We're still looking at the first move down through here. We can expect a bounce off the 180. How far it goes back up and tests the 200, I'm not quite sure, but whatever this is here, it's not finished. So this whole, if this is the fast bit of the trend here, that means that bar there right in the middle of that's the center of the trend from that high there. So we can pretty much grab all of this here and do a mirror image of it over this side here as a reflection, and that's what kind of looking for with this to complete here. So there's not a lot happening here for some time. Yes, it is deeply oversold at this point here, but we knew that we'd get a bounce from this area here anyway. So anyway, nothing sort of cooking there. The sugar market has moved up nicely as expected and triggered a few more long positions in. Just looking at the daily here, just to simply point out that we will be looking for resistance in the 1820 to 1830 area here. If you've triggered in a few long positions here from 1730, 50, group 2 through here, and even the 18 or whatever, I suggest taking some profit at 1820. Like 50%, because there's a reasonable chance that there will be a corrective pattern folding back below the 1800 there, and we can kind of see that too. We can see, even though it's moved up strongly overnight, we can see weakness, and we can see weakness in terms of the range that it had overnight, because the previous range here was quite long and this one here is a tad shorter, isn't it? So just losing a little bit of momentum there. So we can expect, let's go and investigate this now. So this is the triangle pattern that we've been following. This is the 4-hour chart here, and we had calling this low in right here. It's nice to get it right now and again. Didn't expect it to move off so sharply, but those orders should be triggered in at 1730, 1750, all 3 orders through group 2 here, and also you may have had orders tripped in at 18 and also into group 1 here, and that's why, if that's the case, I'm suggesting take 50% profit here. Yes, it could go a little bit higher through here. We've got that daily trend line coming through the top here, remember. Probability of a correction here is reasonably high, high enough to lock in some profit here, and we'll pick up those contracts on the way back through in this area through here. Okay, so looking at this move up through here, I don't know if wave 1 is completed yet, and that would mean that there's 5 waves in here, in this leg here, or there's only the top of the 3rd wave here as such here. So essentially wave 1 and 2 here, and I'm not sure if this is all the 3rd wave here, and we've got a 4th and then a 5th coming in through here, which would take us a bit higher. Not much, because the extension's in the 3rd wave, so wave 5 here would be the same as wave 1 here, so not a big deal. Yeah, so it's fine either way. It's just that we got to look at profit taking going on at this level here. This is more like an overshoot pattern, so the distance above can be the distance below that can occur. So normally there's just the classic trading levels pattern, and there's variations on the classic trading levels pattern as well. I won't go into that, but the other one, main one, is the overshoot pattern. So the classic and the overshoot, as I call them, and the overshoot, if it doesn't stop here, then it's likely to swing back, and then it will find the 18 as a balance point there. So in its own way here, sort of move in through here and then move up from that point there. But we are interested in, we're going to keep the stops out of the way at 1742 because we don't have a reference point up here to move it up, and we don't want to move it up to here somewhere, because we'll only get stopped out anyway. You might as well take the money at this higher price here. And but look, leave the stop out of the way at 1746, and we'll look at some type of corrective pattern in here as such. And I have made a bit of an effort to count this up through here, but it's not strong enough to make any sense. I probably need to spend more time on it and pull it apart on a 5 minute and 2 minute, and do the homework on it. But we're either at the top of the third here or we're top of the fifth here. But either way, we'll be looking at some sort of correction here. We'll be able to look at the size of that. All right, the orange juice, not a lot change here. It's got the possibility of moving up through here, as I said, and you could go long through here and put a stop under the 160, but I thought it might be best to wait for the 163 to become the retested support, and then you just really want to get one position in here, right, or something small anyway, and then we'll look to add on top of the 65 if that's the case. If we bought one here, we can buy two up here, and then we can add some more up here as well. We need to, this three-wave price action here is telling me that, this is in bearish mode here, but once that high there is taken out, and that's why I'm saying tested support on top of the thing, because we do get spikes in the market, and they can lead us astray a little bit on count. So we need to see a bit of time spent on 163 and a sort of above this here, not just one spike, and that will help us confirm that we'll push higher. Right, that's it for the commodities. Thanks for listening.